Well, thank you everybody for coming today. I know everybody in Cayman will come here for a free glass of champagne, some wine and some nibbles. But also, we're going to do something interesting and have a conversation with David here, because I think everybody's interested in tokenization of real world assets is the question I get asked actually the most from people outside the space. It's like, when is this going to impact the other things? Particularly people who aren't really sure about blockchain, they kind of hear about it. But as ever, let's just start the whole story of you, how the hell you got into this, why you got into it. Because I think it's always good contextualizing your journey.
Yeah. How did I get into this? So my journey is very much one of starting out a career in finance in around about 2001.
Right.
I started out on the tech side, coding is part of the e-commerce boom. I was very, very technical. I could build websites.
Wow.
Yeah.
Very good.
Really impressive stuff. and really from that, though, I got pigeonholed into the whole giant machine apparatus of the finance system, and spent the next 15 years working on a variety of buy and sell side companies. I started off at Merrill Lynch, moved across to Credit Suisse and Goldman and a variety of others. Worked on a load of different asset classes, and then had the interesting time of viewing the global financial crisis of 2008 to 10 from the inside of Goldman as all that unfolded. And it was a fascinating point in my life, because I was in my probably late 20s roughly at that point. And I really thought the system that I didn't fully understand was really very efficient and very clever. And a lot of these products I was working on, like collateralized debt obligations, obviously were just really, really, I was too
And the
stupid.
people were smart. The people were smart.
Exactly.
Of course, nothing could go wrong. They knew what they were doing.
I literally looked at these term sheets, didn't understand how you could take the debt and recategorize it, but it seemed to all work and everyone was getting richer. So in my naivety at that point, that was my coming of age moment where I realized the system was really not actually serving at least the purpose I wanted it to. And so the journey, therefore, from moving out of finance and into an entrepreneurial pursuit and utilizing blockchain came off the back of that, because I realized I did not want to be part of a system that really was effectively, it was almost like that meme, are we the baddies? You know, in the Nazi uniform. It's sort of like, I looked around and thought, hang on a minute, I thought we were the good guys.
Well, there was Occupy Wall Street. I mean, they were telling you were the baddies, right?
I know, but I thought they were.
Oh, I see. I get it.
Yeah.
The penny hadn't dropped yet.
I thought they were the commies or something,
right.
You know, and we were the good guys. So certainly, yeah, around that era was when we were really starting to reassess as an industry, I think, how we approach risk and what we were doing. And obviously the industry changed a lot over that next 10 years. But I started looking at Bitcoin around about 2015. That's when it really caught my eye for the first time. And it was 2016 onwards, I decided...
Why did it catch your eye?
Well, it caught my eye because it kept popping up on my newsfeed just again and again. And I started to see the odd article from various people I respected, like John Malden, the economist, talking about it. And it made me think I need to start spending some time actually looking into this. What the hell is this thing? Why does it keep coming up in a variety of different forms? And off the back of that, I discovered Ethereum. And Ethereum was the game changer for me, not actually Bitcoin, as to why I decided I'm going to go all into crypto. And for those not familiar, it's the smart contract concept.
What did you see in a smart contract? So a lot of people didn't get it at first. I remember when friends sat me down and said, okay, Ethereum is the next big thing. I was Bitcoin in 2012 or so.
Yeah.
And I'm like, I don't quite understand this smart contract thing.
Yeah.
What did you see in it?
So
because
for me,
you'd seen all of the contracts in the financial markets.
I'd seen the full front to back system as it was in the current financial system. It was a spaghetti junction of siloed systems, a complete data mess. And this concept, you could actually use a centralized distributed ledger, sit there with a smart contract at the app layer sitting on top of this. I instantly saw the efficiency gains. You could add massively just into the system. And that was before I understood the power of tokenization to apply and disrupt industries on top of that. Just from the efficiency perspective, I thought, wow, game changing for the industry to leverage this structure and put this in place.
One of the things I saw when I first understood smart contracts eventually was like, oh, this is the whole OTC derivative market.
Absolutely.
All those is the docs were stuffed under people's desks and all of that stuff.
Yeah, well, no, absolutely. I was doing that. I was working on structured products where, huge swathes of paper and PDFs. Suddenly this can all be programmatically in a contract and just deployed, and it will operate and it can be automated. Yeah, game changing. So that type of thing was certainly what then led me to go down this path, and then to sort of finish off as to where I got to where I am now. I thought, well, the best way to actually get into the industry really is firstly to quit finance completely and stop being distracted by the day job. So I did that. And I was
What year was that?
That was the back end of 2017. So the ICO boom was just Starting. It was warming up. I think for context, Ethereum was probably hitting about $100 at this point for where it was. And Bitcoin was probably flirting with $5,000.
Yeah.
And we were about to hit peak market at that point. But I really got involved in one of the many alternative L1s to Ethereum that was going to be a highly scalable alternative in theory and add a load of efficiencies because it was being found wanting for a variety of different things for scaling. And also the problem of how you were going to do it with real world assets was how are you going to put controls in place around things like the markets and who can participate. So I could see from my background that it didn't lend itself fully yet in its current form to that. And so I went all in on one of the launches of those, and that was the EOS blockchain. For those who...
Oh, no way.
Oh, yeah. So there are a few people in the audience who will also remember this. It was the biggest ICO of that era. And I just went all in to become a block.
And they're all here now.
Yeah, exactly.
The whole business is here.
Yeah. And so I became a validator on that network, and I funneled all the money from that to bootstrap Chintai, the company that we founded in that era. Originally just to do network resourcing, fully on-chain as an exchange model, and then we branched out to do the full RWA stack that we are doing now.
Well, how did you even approach that? Because this is not an easy problem.
No.
There are a lot of people I know all around the world who are trying. People have done bits and pieces. Let's talk about all of this. First, for people who don't understand the RWA thing, what's in your head?
So when I was looking at real-world asset tokenization, because I had the misfortune or fortune, depending on how you look at it, of spending the last 2 years of my career in risk and compliance, I got thrown into it. Very dull, but very useful from understanding this was not going to be an optional extra we could throw in and just pretend didn't exist. So because of that, I was aware of all the different types of risk, all the types of compliance requirements that were needed for real-world assets to be traded. And so when I looked at the problem, the problem to me that I came to the conclusion was we were seeing things in that era like Securitize were trying to use the Ethereum blockchain, public chain, and tokenize things and put them on there. And they were rapidly starting to realize the SEC were cracking down and you couldn't deploy security there. Firstly, you needed access to the licensing to do it legally, but then you couldn't actually liquid trade this thing in a way because what happens if it starts getting sold to a market where they're not allowed to? So you had the control problems instantly visible to me. And I looked at what we'd already built for the very first iteration of Chintai, which was a token leasing exchange. So the name Chintai means lease in Japanese. That's where all we did was leasing initially of network capacity. And it was a great early model.
Why a Japanese name?
Oh, Satoshi Nakamoto. You got to pay your homage.
Probably not Japanese.
No. It was close enough for me when I was thinking about quick names to throw in for a business that was just a quick, Yeah, no, I know. Looking back, it's a funny kind of historical link to what we started out with our origin story, though. But nonetheless, yeah. I mean, ultimately, we started out doing that, and we built out an issuance model to deploy our own network token, and then we deployed a full on-chain exchange.
And your network token is on what blockchain?
It's on our own network now. Yeah, right. It's the network token for our network. So we haven't really come to the solution that we opted to do. And one thing I would say to bear in mind about RWA generally is the industry is actually not yet reaching a consensus as to what the optimal solution for RWA is, either as an industry or what we would like it to become. So if you think about it, there are some that would like everything to operate on public chains, or ideally one public chain, their favorite one that they own an awful lot of tokens on, as an example. Then there are others that see a multi-chain model where lots of different protocols interconnected with a seamless front end for the end users, where you can pull the underlying liquidities, maybe deploy in multiple venues. And then there are others that are going to try and do it in a completely private fashion where you're taking the blockchain technology, but it's actually a series of permission chains that are fully controlled and not decentralized at all. So those are I think probably the breadth of options that we're really seeing with RWA solutions as we see them today. We've opted for more of a staged model where we've deployed a permission model now with a chain that can fully enforce compliance, but we are planning to interface to lots of other protocols, most notably like Solana, for example, and Ethereum, and we are planning to decentralize.
So you're not an EVM chain?
We're compatible with it, actually.
Right.
Yeah. But the underlying network itself doesn't need to be. It's more about the ability to interoperate between these protocols that's the key right now.
So what kind of assets are we currently seeing being tokenized? What have you done so far?
So the most traction we've got so far are sustainables like carbon and hydrogen.
Yeah, we've seen quite a lot of that.
Yeah, there's a lot of growth there, I think, partly because they're not regulated. So you don't need licensing and they can face off to retail with less controls. And obviously, there's a lot of geopolitical drivers behind that too in the industry. Because of the decarbonisation efforts, there's a lot of money to be had in this, and that's driving a lot of traction there. We are seeing a lot of traction in real estate in particular now, finally. The fractionalized real estate potential has probably been the most compelling use case for RWA, certainly since I started going to crypto conferences in 2015. I remember people talking about it.
So why has it been so difficult? So every real estate person I've ever spoken to,
yeah,
the bigger they are, the more they're interested in this, because they just think new market, new liquidity,
absolutely,
new ways of raising capital. Yet the St. Regis, the hotel in Asia, I mean,
we're doing several hotels, actually, yeah.
Because very few has actually been done. What is the friction?
Well, I think the friction comes from several different places. So on the one side, we'd say real estate specifically. If you want to realize the true potential of a fractionalized real estate trade, it really needs to reflect to the land deed registries in a given jurisdiction, right down to the tokenized level. And that means integration at government level systems too. So since none of that's really been done almost anywhere yet, maybe notably there's one example of it in Australia that they've done something like that. But outside of that, you're really looking at some sort of SPV, special purpose vehicle type holding vehicle that you're tokenizing that as the owner of.
So you're tokenizing the equity of the
whole... of the property. So firstly, that's the slightly disappointing reality of a lot of these fractionalized real estate deals that you're really seeing. You're seeing an SPV being tokenized as the whole co effectively for it. And it can be, multiple properties, or it could be one. So that's one of them. And then if you think about the general traction problem we have, crypto is full of different types of investors, but it's most notably full of degenerates, complete degenerates, let's be honest. And they are a certain type of degenerate.
Nothing wrong with that.
No. I love them to bits as well. I mean, I do. And I pride myself on being one to some degree as well, with all the latest meme coin mania as well. But if you think about it from an RWA perspective, in fact, I just put something out on X today about this. We've got our first security token offering coming up. I listed off the criteria. It's something like, if memory off the top of my head, about 72 million of revenue last year, 15% compounding growth. It's got 1,100 employees, 25 locations. They're doing an equity offering, right? Who's actually going to be interested in actually buying real-world assets of that nature, tokenized real-world, to add to their portfolio? Is it going to be the average crypto degen? Absolutely not, I don't think. It's a different class of investor within there. So to your question, what's been holding this up? Partly we haven't had the right kind of investors yet comfortably onboarding, either because they've been put off by the onboarding apparatus that we've had to date, or we haven't actually had the kind of deal flow that really interests them. Are they going to want to invest in dog with hat? Probably not. A sophisticated investor, maybe.
I do.
Well, right.
I'm sophisticated. Yeah. I've got dog with hat.
You're more what I call adventurous, sophisticated, right? So would I. Exactly. I would invest in all sides too, but there's an awful lot of money out there that's sitting and looking to more invest in what you would call backed, serious types of tokenization.
But the issue I've got with this is I know every single real estate developer wants this. I don't know a single buyer who does.
What, that wants to buy fractionalized real estate?
It's less, because you say, the people who care about tokenized stuff, really the returns just aren't interesting enough.
Yeah.
So somehow you got to find another group of people who are going to get over the hurdle of buying a token versus, a timeshare or whatever it is. How do you get there?
Well,
the sellers are all motivated. Everybody wants to find more liquidity.
So to answer that, that's why I'm not going to Token 2049 in Dubai, and I'm going to Money 2020 in Asia instead. Different type of investor right there. So the types of people who are filling out that deal are going to be wealth funds with ultras in and other types of high net worths. They typically have got very little, if any, real exposure yet to anything in crypto. Maybe they've dipped their toe into Bitcoin type things.
Yeah.
But they are interested in tangible deal flow. They regularly invest and back things like real estate funding out of a hotel complex, for example. Yeah. So for them, this is merely an alternative way to invest in the things they already do that can be either wider, cheaper, more easily added. We've got a couple of wealth management funds where they're simply white labeling what we've got, bolting it and adding it through the APIs into their existing product set. It'll be tokenized for the end user. The end users won't know that, though. It'll just bolster the offerings.
But what advantage are they going to get from it? Is there going to be more underlying liquidity so so they can diversify portfolios? Because many of these big, pension funds or whatever have vast amounts of resources, so they diversify by buying an entire, building developments in one place and another place.
Yeah.
Why do they need the fractionalization or the tokenization?
Well, then it comes to secondary is often the most compelling thing that comes from this. There's a few things. With funds, you've got the reusability of KYC across all the different funds, so you don't have that. You get some efficiency savings there. The biggest single one, whether it's funds in general for me, whatever the asset, is that you can deploy a liquid secondary market with an AMM for them. In parallel with the issuance. So we're doing that with one of the funds in Asia. There should be an announcement maybe next month on that. What they're doing is tokenizing a proportion of the fund they've just done the raise on. Mm-hmm. And the LPs, it's a private LP AMM where they can exit in theory from day one for the first time. They're not locked in for that 5 to 7 year maybe payback period you're used to as an LP.
And how does it work with the mismatch of the underlying asset? Because those might be locked up assets.
So this is, in this particular example, is of a fund. So it's just the fund. They've tokenized a proportion of themselves, the fund itself. So you can effectively exit in or out and increase your stake as well, fairly dynamically on a private market that's all accessible through a front-end UX. So this is part of the challenge we've had with RWA is crap user interface experiences too, but that's a bit of an aside. So here, to answer that point, for me, it's that secondary capability being added is the other compelling aspect of this, because the big problem generally with real estate is it's illiquid. It's that lockup period.
One of the things that I thought about, we're here in the Cayman Islands today, is property accentuates the rich getting richer, the poor getting poorer. So here we've got a bunch of really scarce real estate on 7 Mile Beach. It's owned by a bunch of Caymanian families, and they sell bits off and they build developments on. The average person who's from this island can't afford to participate. And there's an idea here somewhere that if you were allowed the tokenization of these $20 million apartments, because they go up a lot more than regular housing, because they're scarce and highly sought after. If you could tokenize that for the local pension system or for local people, everyone gets to participate in 10% of their wages or their wealth. It becomes a portfolio
exposure type thing.
And you can have different exposure, and before you know it, everybody's on the same footing. So if that property goes up 100% over 3 years, as opposed to people's regular houses, whatever, they get to participate on the same footing. Are we getting anywhere close to that yet?
I think we are, actually, for the first time. I think if you look at the industry 3, 4, 5 years ago, quite a lot of that was very much about promise. And there was a lot of messaging around this is coming and it's coming soon. And as an industry, we really overpromised and underdelivered. And part of the reason was that the actual financial institutions weren't ready to participate. But we hadn't really thought through a lot of these problems related to how do we build a seamless experience? How do we actually embed and handle these compliance issues and control issues? I do personally think we are at a point now where with the types of issuances we 100% are doing this year with our client base that are filling out already, that you're getting close to that exact future you're describing, which is the technology becomes largely invisible and seamless to the end user, and it augments what they're able to do, which is to effectively say, I can take a selective store of value within a wider portfolio in a fairly liquid form, very efficiently, to anything, whether it's some high value whiskey, whether it's a particular supercar that's a one of three limited edition. A lot of these things are stores of value, and if you want to selectively buy in or out of those, you as you say, you either buy the entire thing, or most people are priced out and you can't currently, and it's very hard to resell. The fractionalization of it, therefore, and this fungible trading of them in a liquid form is the true end game here for tokenization, at least from my perspective, and what we're aiming to do, which is facilitate as much of this in as many industries as possible, as seamlessly as possible.
One of the ones that I saw that was super interesting, in 2021, an Aussie family office contacted me and said, we're going to give you an NFT. I'm like, great, what's this all about? They're the largest wine and spirits distributor in Australia.
Yeah.
And it was the guy runs their family. And I'm like, what are you doing? He's like, oh, we've got a whole island in the Whitsundays, of which we're growing agave plants, and we're making a super high-end agave spirit. Can't call it tequila, but it's not from Mexico.
Yeah.
And your token is going to be a square footage of agave plants.
Oh.
And the siblings of your plants, you'll have to pay again, but can replant. So you could have lineage, and you will get 300 liters of spirit from your NFT. We will bottle it for you. I'm like, okay, this sounds very cool.
So that's an NFT linked to ownership rights of sorts.
Yeah.
Nominally, which gives it more tangible value, doesn't it?
Yeah. And then the next part, I said, well, I mean, they're one of the richest families in Australia. I'm like, why are you doing this? It's not like you need to sell this.
Yeah.
And they're like, oh, we're just messing around because we've got a bigger idea. What's your big idea? So we want to tokenize all of our distilled product and wine. I'm like, why is that? They said, okay, we're in Australia. We sell most of our wine to China, Japan, Southeast Asia.
Yeah.
Everyone has inventory problems and stock problems. And so we think we can solve inventory problems by letting people buy an NFT that gives them a certain amount of inventory. So it's like Chinese hotel chains buy thousands and thousands of liters, but they don't know whether they've overbought, oversold, and then some of this stuff doesn't keep, whatever. And they can just sell the inventory straight back in the secondary liquid market. Thought super interesting.
That is interesting, yeah. It actually reminds me of somebody I was talking to who works in the hydrogen industry, and they, as soon as I described this technology to him, he instantly was able to apply it to the hydrogen industry and say, we don't have an industry solution for this yet, but tokenization is perfect from what you're describing because it can handle all these features of hydrogen related to leakage, which is something that means you effectively need to apply a discount factor in the trade life cycle. And the fact that there's onward convertibility in other types of, in the energy source into ammonia and other types of onward markets, that he could instantly see, wow, this kind of technology can completely transform how we as an industry trade this right now, rather than it being very, very manual. It's interesting, your description is a similar thing, which is when you show this technology to the genuine
supply chain logistics
experts,
is what they're thinking. It's like you can completely change that.
Yes, absolutely. But generally, that's been my observation. If you enable the innovators with this technology, rather than pretending we're the actual innovators for a moment, you find that anybody in a given industry who is truly the expert in it can usually see ahead at how they can apply it in a variety of ways. That's what we're certainly finding. There's a huge amount of education going on ongoing still. It's easy in our industry to figure out we know and understand the technology, but most people don't. And as we show them this, we're finding they keep coming up with ideas as to how they can use it.
And what about the asset management industry and their products overall? Because we're starting to see it, right? They all want to do it. I know the team at Apollo and Blackstone and BlackRock and all of these guys, they're desperate to tokenize as much as possible because they've got these big illiquid closed-end funds.
Yep.
Private equity funds. That's probably the biggest thing. And they're like, we just want other people to get in and create illiquid pools, because what happens is the liquidity is so bad. So 2022 and 23, everyone's desperate for liquidity.
Yeah.
And these things are trading 20 cents on the dollar because there's no liquid market. And it's kind of super inefficient.
It is, yeah. I mean, I've had a lot of meetings with these larger players.
Oh, and also regular retail can't buy these products.
No.
And they're thinking, look at this massive market, we're not getting it.
Well, they're in for a shock because, I mean, unfortunately, most people operating with licensing, this is not going to be in the realm of retail anytime soon either. I don't think realistically. It's going to be accredited and above type levels.
But why, if you can spend $10 on something,
Well, I
why
agree.
is that the risk?
I totally agree with you. Unfortunately, certainly the terms of the financial licensing we got in Singapore, which I haven't really touched on, but part of that journey originally was deciding we're going to have to go for financial licensing too. And we kicked off that path to getting the 2 licenses we have in Singapore back in 2019. Took over 2 years to get them. So it was not an easy journey at all. But there are constraints. But to your question as to why will they not allow it, generally the regulators are risk averse, and they want to see a market operating in a performant, controlled way before they will say, all right, you've evidenced this is safe, therefore now we'll allow you to trial this out, for example, for this product type, for retail only up to say $1,000 or something. I think that's how we as an industry push these barriers back until we do open it up to more and more retail. And that's also why we opted for the permission network route, which is we need to be able to show them full compliance, and then we can show them, now we can safely put these onto token extensions on Solana and operate it as an app layer there as well. And we could do it on Polygon and on an Avalanche subnet and et cetera, et cetera. That's how I see this moving personally. You get them comfortable and then you push the boundary back a bit more.
And how do you deal with this multi-regulatory world? Everybody's at different speeds. Right, so Singapore's got the sandbox, so you can operate in that.
Yep.
Fine. Then Dubai's got another set of rules, but Dubai's less attractive to international investors. Then you've got, everybody's got a different set of rules.
They do, yeah. So certainly how...
That's a very expensive thing for you to do and time-consuming to go and figure it out. Should it be you doing it, or should it be whoever's tokenizing the asset? How are you thinking of this?
Well, because we are tokenizing the assets, it's our problem. So we have built the solutions for it. By asset class, adding the jurisdictional rules in slowly, bit by bit by bit. It's a giant on-chain rules engine as an automated service across the whole trade lifecycle. And we've had to do it because the benefits make it that much stronger for the clients. The fact that they can effectively deploy this token, simply specify, the underlying asset class that it fits within, the jurisdiction it's going to be oversighted by, and then to a large degree across the trade lifecycle, it's auto-enforced at the smart contract token account levels is a powerful model. For me, that's the end game as to how you properly use blockchain.
But how long does it take to get there? Because the UK's not through with its regulation.
No.
The EU's pretty much there.
Yep.
Switzerland's there.
So for now, most of the time, it's going through our Singapore licensing. So we only care about Singapore to a large degree. You, for example, could just onboard through the Singapore side as an accredited investor, and it wouldn't matter. You'd be oversighted by them, not the UK. It wouldn't matter. But you're absolutely right. And there's very little standardization. And as a challenge for the industry, this is why I think personally partnerships with other licensed companies is the way forwards to this. You can't get licenses everywhere.
No point.
No, it's a lot of duplication as well. So we're largely trying to do that too, which is have conversations and work out who we can partner with to service larger deal flow. Because RWA is the key to this. Is not just the act of tokenization is a small part of this now. It's how do you make a success of the issuance? Well, it means it needs to be fully filled out and distributed so that side's successful, and then you need a performance secondary market. So. Yeah. So
what is it about what you guys do that somebody else couldn't just go and do on Ethereum or whatever else it may be?
Well, it's like anything. In theory, anybody can always rebuild something that's been built before, right? So there's. But what are the main barriers to it? Well, firstly, it's very, very complex. What's been built? It's taken years to build to this level. You really do need access to the licensing, whether it's your own or it's through a partner that's going to be prepared to let you do all of this through licensing of this level as well. And then you have to think about the protocol you're based upon. So I'll give you an example. I actually really like Solana for all its flaws. But one of the big problems it has right now is its downtime and its latency issues. So one of the things we have to make a commitment to for our licensing to the Monetary Authority of Singapore, 99.9% uptime annually. You can't just go down for 12 hours at a time on an RWA token market or in mid-issuance. So as an example, these are the types of challenges that the RWA industry generally in crypto is going to have to face up to, which is we are going to have to address the compliance issues, the control issues, the performance issues of the different protocols. they have to meet with the standards of real world assets, not the other way around. We can't expect them to fit in with Solana just going down periodically at the moment, and that's fine. I think as an industry we'll get there and we will resolve those, but they will be drivers to force the protocol upgrades that make that happen.
So what are you most excited about for you guys over the next 1 year and 5 years?
For the next year, I'm most excited about actually proving to everybody RWA isn't just another next cycle thing.
It always is.
Yeah, exactly. It always has been up until now. So being able to say, for the first time, it's gone live. And by the way, the whole carbon issuance, it filled within 3 days. Fantastic. And, being able to say that we've got Swiss Re involved in that deal, it's a big deal. Things like that you can actually say that type of thing to the industry. Wake up, everybody. This isn't just talk anymore. Here it is. It's happening. Being able to say we're doing a security token offering and it's fully legal. It's using the technology fully on chain. I mean, it's basically we're at game time for the industry for the first time this cycle.
When property. I mean, because honestly, that's I get it every time.
I know. Yeah. I still think property is in some ways the most complex one. So I think the funding out of property construction is clearer cut for me, and that one's easier. The actual full
funding of
So it's the build out of hotel complexes. We're doing several of those.
Oh, really?
In Asia.
So that's the capital raising process.
Yeah, it's more the capital raising process linked to real estate though than the actual full fractionalized real estate thing. I'm not sure on that one right now as to exactly when it's going to reach that moment. It wouldn't shock me if that one is a next cycle, true potential type thing.
And so what else is happening that most people don't see is happening in terms of tokenization of real world assets that you think is likely to happen and surprise people? This is in kind of the next 2, 3, 4 years.
I actually think that real world assets may end up pushing the identity layer, things that have been around for a while in crypto, to the mainstream. And by that, I mean to leverage an effective decentralized identity layer is an obvious way we can solve some of these problems across the access control aspects of different chains. So I think that's something that most people are not considering yet, that I think will become a surprise in the next couple of years, because we're already looking at leveraging several for a variety of different reasons. Outside of that, though, it's not so much the asset classes, so much as I think it's the scale of this is going to surprise people. Because if you think about what tends to excite crypto right now, let's say, does $100 million issuance sound exciting? Probably does to crypto right now, but it's actually a drop in the ocean for real world assets, absolutely tiny. So when we've said that, we now have clients that are tracking for over $1 billion easily over the next year, people seem to think that's huge right now, but it's actually very small in the context of real world assets. Where what's the global bond market at now? Is it 150 trillion, something like that? Yeah. Just that one asset class, 150 trillion, let's say. So for context, I think that's going to be something that generally surprises people. Is that all it takes is a couple of successful issuances to take place for that to really encourage more of an opening of the floodgates to me. And I see that happening because most of the clients we're working with, they're not just doing a one-off with us, they're doing many. This is just the first one. We've got one client, they have got between 50 and 60 deals they want to tokenize and go out with us on.
What kind of deals?
There are a variety, actually. So that's what makes them so interesting. They are doing several property ones. They are doing several related to fund raising. They also have a couple on the carbon side as well. They seem to be the recurrent themes, though, coming up and again and again and again. But they each of the deal sizes is not huge. It's in the sort of somewhere between 5 and 50 million USD each deal. Mm-hmm. But you're talking 50 of them. Yeah. And all right, that's not all going to happen over the next year, but it shows the potential there. And I think as an industry, crypto is going to have to start to adapt to this idea. We're no longer just operating in our own silo. There's another subclass of crypto token investors who don't really play in our sandbox in the same way as us. They sit there and they manage portfolios and invest in all this boring real world asset stuff that gives 8-10% yield type things. And they don't seem to want to play in our meme sandbox as much because they're not Raoul Pal. So they don't do both.
Have you thought about the recycling of yield out of kind of real world assets into DeFi land.
Well, actually,
there's got to be some interesting stuff.
Yeah, I thought of it the other way around, actually, which is how can the DeFi system actually usefully provide services to RWA? And for me, the liquidity is the top single thing. Clearly. I mean, it's if you can look to collateralize, let's say, blue chip crypto like Bitcoin, Ethereum, you actually park it in an escrow account, and the holders are willing for you to use that to deepen the liquid markets on the RWA side, even though they're operating in a walled rose garden capacity where they aren't necessarily directly interfacing. You can source liquidity as an alternative to obviously the conventional system, deepen them dynamically, provide actual yield that's reflected back to them. That's one obvious example for me of where I can see immediately how DeFi can provide some major value for RWA. Yeah, but it goes the other way as well. You're right.
Yeah, it seems that there's something there that different yields can get recycled in different ways.
It's just the recycling of the recycling of the recycling that we saw in the last cycle. Got a bit much. Allow me to farm your interest that's on this staked token that's come.
It's happening again.
Is it? Is it really?
Yeah. I had a dinner last night, 2 nights ago here, and I'm like, really?
It's like this where we are again? Squareds again, isn't it?
It is.
It's the same thing. It's just crypto's doing it.
Humans love leverage. They can't help sex and leverage. 2 things they just cannot keep their hands off.
Yeah.
So outside of what you guys are working on, what excites you in crypto? When you're peeking outside, because you're busy, stressed, you've got all of this going on.
Yeah.
But there's another side of you who's the same guy who discovered Ethereum, discovered the whole thing. What excites you?
Well, by the way, actually, on the subject of Ethereum, it's been getting a lot of hate. But
it has, interesting.
I actually think the migration they did to proof of stake was unbelievable.
One of the greatest technical engineering feats of all time.
I was so impressed at that point that they managed to pull it off the way they did. So
you're wrong about Solana as well. It doesn't go down anymore.
Oh, does it not?
We'll get you across the line later.
Okay, yeah, okay. Well, no, I mean, I hope it doesn't too much. It's more the latency issues actually that are the problem right now for it. You're right. It not anymore. It's. But what really excites me right now, I do think that the application of AI within the technology has a lot of potential. I mean, if we look at ourselves. For me, it's what does AI need to really be maximally used? Machine learning models need data. And what, of course, are we with blockchains? An incredible data source. Whatever that is, the on-chain data can have huge power for machine learning models. And so we're looking at it from a transaction monitoring perspective and saying, all right, these simple rules we follow right now, the opportunities to actually take this data and be able to say to regulators, via the training of all this, we now know what fraud looks like on a carbon market for the first time. No one else does, but we do, because we've got that granular data. We can see what fraud looks like on a real estate token market too, for the first time, and how market manipulation's taking place. Didn't get picked up by the rules.
There's a question. Do you think anybody actually wants to make the property market transparent?
Well,
more money is laundered through that and the art market than all the rest of the world.
Are you trying to imply that those $1 million rocks sold last cycle were not worth $1 million?
No, I'm more thinking about all of the real estate.
Oh, I know.
Transaction in Vancouver and Dubai and London.
Yeah, I agree with you.
Miami.
Yeah. Who knows on that particular one? I do agree. But they definitely excite me, the applications of AI, regardless of how it is. And I'm loving the meme coin cycle right now, personally. I think.
What is it about it that you like?
It's fun.
Because look, you're smiling,
fun.
right?
Yeah,
Which is what I love.
It's fun. I mean, I love the fact that generally, I'll tell you what it is.
Betting on raindrops going down a window.
Well, right.
But that's fun too, I guess.
Yeah, I mean, there are a variety of aspects to it that I like. One is that you're seeing the Solana technology being used as tokens are meant to be, which is anybody can issue their own thing, whatever it is. Whether it has value is subjective for everyone else to decide, but anybody can issue these things. And I'm loving seeing that.
And in minutes.
Minutes and seconds.
Yeah.
It's a news event is coming up and a token is coming out. Did you see the one for the bridge token after the boat hit the bridge in the Boston Harbor? Oh, yeah. Bridge token was out within minutes and soared and then crashed.
It's genius, right?
Tasteless as well.
Obviously.
But I mean, ultimately, I'm loving that side of it. I'm also liking the fact that, to me, it's a natural extension of some of the more gambling aspects, or should we say, that we saw in the NFT cycle last time.
Yeah.
NFTs, to see their true potential for me, they do need to be linked to things with tangible value, whether it's content rights, whether it's income streams or ownership rights, a variety of other things. That's the NFT. But actually, the true extension of the NFTs to me in how they were used last cycle is to make them fungible and liquid tradable, which is meme coins.
They were culture.
Yes, because they're
you're capturing culture.
Yeah.
It's like a joke that goes viral.
Well, think about it. Bored apes. Well, it's sort of how we were describing ourselves. We're a bunch of degenerate apes trading away. And that's sort of where I think
it's like MFers, which is a great example. Another NFT culture of just like everybody in front of their computers, just, doing this stupid shit. And then now there's a meme token, which is an MFer. And some of these things, like, people can't get their heads around culture. But if you think about what is Disney, it's culture.
Yeah.
What are so many things? What makes a Louis Vuitton handbag more expensive than the leather that makes it in the manufacturing process? It's culture. Right?
Yeah. No, absolutely.
And what we're doing is tokenizing culture. And the memes are just tokenizing instant internet culture.
Yes.
And some of those things will last a day. And Dogecoin is 40,000% and has outperformed Bitcoin since its inception, which is bananas.
That is bananas. Do you think that there's partly a reflection of the whole GameStop movement, where we saw a pushback and then we saw the Robinhood incident where it proves to people that there was a certain degree of arguably manifest control over the little guy winning too much? And then if you think about meme coins, you can't regulate this because they're not. It's almost an open admission. These things don't have necessary value to you. They're not a financial asset. So they're just memes. So
yeah, if you can trade marbles or anything else.
Right.
It's all part of the same thing that happened after 2008. We talked about it at the beginning. Occupy Wall Street was the realization that the finance industry had let us all down.
Yeah.
That they didn't have your back, they had their backs. And everybody had realized that the trust that they had was wrong, misplaced.
Yeah.
And that's eroded trust in government, trust in media. Its trust is getting eroded everywhere, and you kind of realize that. So Occupy Wall Street was the first part. Then it kind of died down for a bit. We had the Indignados in Spain. There was 2 million people marching to the streets of Madrid. That was 2012. Quiet. 2020, 2021 was GameStop. Gave people money. They're like, we have no future.
Yeah.
We are not going to play by your rules. In fact, we're going to take you on and play our game. And we grew up on video games, and you will not beat us.
Yeah. And
we know how to gang up. And Wall Street got a really bad black eye then. And people on Wall Street were like, see these stupid idiots, they've just blown themselves up. They didn't care. If you went to Wall Street Bets forum, people were celebrating losses. It was fun.
Yeah.
Like they are doing in meme coins. It's like, stupid chat, bought one and it's down 80%.
Yeah.
All right, on to the next. And they didn't care. So this meme coin thing is the same. It's like, we're not going to play by your rules.
That's what I've detected, almost a parallel between the two. It felt like an extension of it.
It's exactly the same thing. Yeah. Same people, same mentality. It's like, we don't care about your rules. I'm not interested in what you can tell me I can invest in. You won't let me to invest in VC.
No.
You won't let me invest in derivatives.
Well, a lot of RWA stuff. Yeah, they're not allowed to invest in a lot of this stuff. Yeah.
And who are we to say, you're not allowed to buy into a VC fund?
No.
But you can go to Vegas at the age of 17 and blow all of the money you've been given.
Yes, exactly.
Like, there's some weirdness here, and it's because there's middlemen. And what you're really doing here is getting rid of middlemen.
Yes, and that's something the finance industry is very well aware of, actually. Sometimes we talk to asset managers, and they've worked out we don't actually need the investment banks in the way we did for so many different things for this. If we use you for these and these things, do we? And then I remember talking to Euroclear. They came to me and said, so we're interested in tokenization, and how would we fit into the settlement process? And I explained, it's instant, the settlement. It's a feature of blockchain, so you don't have a role at this point. You're going to need to change your business
model. Don't need to be the ledger, because Euroclear are the ledger for the entire bond market, equity market in Europe.
Yep. Yeah, they sort of went away fairly quickly after that. But yeah, it was a bizarre thing having a discussion with Euroclear about that. Yeah, it's probably a year ago now. They were obviously examining their business model and trying to work out how they stay relevant in the era of tokenization.
It was Euroclear who that was what pushed me over the edge into getting into crypto.
Oh, was it?
So I read a book at the time, 2013, written about the financial crisis. And it talks about when Lehman went under, that Euroclear had to lend the system 50 billion euros and didn't say what it took as collateral for that loan.
Yeah.
So I asked them, called them up. I went and met with them and said, this $50 billion loan, what was the collateral? And they said, well, it's the pool of assets in Euroclear. I'm like, but some of those are bank assets and some of those are customer assets.
Yeah.
Not at our level, they said. We just take anything we want.
Yeah.
I'm like, oh, so you're telling me that nobody owns anything? And they're like, no, yeah.
Effectively.
And then I did the same route with the DTCC, same. And at that point, I realized we owned nothing, not even an equity. Do you own?
And then you and I could probably go full Bitcoin here and talk about not your keys, not your coins.
Well, that's why I did it. It's like self-custody. If you can't keep it anywhere in the system.
That's why I love Bitcoin, yeah. Genuinely. So.
Yeah, that's right. Although self-custody is not easy either.
No, well, you've got to make sure, yeah, exactly. It has its own challenges for sure.
So what are we going to look for next year from Chintai?
So the next year ahead for us is very much one of scaling now for the first time. You know, we've been in the build phase throughout 2 crypto winters, and it's been heads down while everyone was having fun last cycle. We were just busy building. You know,
and being miserable,
and very miserable during that period. Yeah, everyone else is having fun here. Yet again, we're missing this while we're building. For us, yeah, 100%. It's about scaling now. I mean, and talking as a business owner, we are now facing the internal growing pains of client onboarding, scaling up, adding customer support individuals, hiring additional development teams, and things to scale up the back office. The administration side as well, the sales team to build up further pipelines. The list goes on. Yeah, I'm now pleased to be able to say that's the problem we have. And of course, we have to then look at it from the product side, which is Chintai's front end going live in a variety of different ways on Nexus, which is the crypto-facing side, and then the main regulated side. I would imagine that your user interface will be completely different in 18 months' time. Not only in terms of how it's laid out for the users, but probably the type of information it has and the other types of services, because it's only really through usage you get that feedback loop from the users as to what they like, what they need, and things that we haven't anticipated, or maybe just as the industry starts to evolve. So we've got a really hectic 18 months coming up, but for all the right reasons.
And so where do people find out about what you're up to?
I mean, Chintai.io is probably the best, initial site, or ChintaiNexus.com as well. But otherwise, yeah, I mean, I'm never shutting up on X at the moment as well, nattering about things as well. So.
And where do they find you?
At Gunnison Cap, which is a long story as to why I have that as my handle. But yeah, that is my handle nonetheless. So.
David, fantastic. Thank you for talking to us today.
Yeah, my pleasure. Thanks so much.
Appreciate it. Right. Hold on.
Thanks.
Cheers.